Hi, this is Mac with PriceActionTradingSystem.com, and this is our chart lesson for Monday, January the 30th. And I just wanted to, I went ahead and I've already gone ahead and drawn the trend lines as I would have drawn them today. This first one was a little bit tricky here. Generally, I draw my first two swings off, or my first trend line off the first two swings of the overnight. You could have, every once in a while, this will draw off of here, and even if you drew it off there, it wouldn't have been quite as good. But really, these were, the first couple of swings were right in this area here. So whether you drew it down this way, or if you drew it a little flatter, you might have drawn it a little flatter like this. But either way, that should have, I mean, if you look at those two trend lines, there's not a whole lot of difference in them. The entries were all still at the same places for the most part. So you don't always have to get your trend line exact. You just need to find where you're getting multiple touches, and generally that's going to keep you on the right side. And the only thing that really would have gotten you about this flatter one, it's not quite right, or that might have thrown you a little bit, was you didn't get any kind of retest. And you see that here. We broke a butt, we touched it, we had a failed break lower, and we went higher, and prices never came back and retested it. But if you'd have drawn it off this angle right here, where you got a few more touches, even you would have caught this move right at the open. You would have seen the break higher right here, then a couple of legs down to a new low, and then this reversal that reversed into an upward trend for the rest of the day, and it really closed pretty much close to the highs of this trend here. So, but anyway, just wanted to show you that. And then of course this next trend, if you drew it right off the first couple of swings, I might have drawn this a little bit. May have missed that a hair. That looks more like it right there. And then of course if you clone that, or copied that and drug it up to the highs right here, you can see that that would have alerted you to where most of the reversals would have been on the high side. I don't necessarily recommend trading those, but at least you know where your target should be and when things are starting to play out, and when they might reverse and at least back up or correct and so forth. So we spent most of the late morning into lunchtime in this little tight range, which has been kind of typical without much going on. But what I've done, I want to show you, there are other trades in here, but I want to show you the key entry points, which this was the first one right after the open. That's a great setup right here during a pullback to the trend line. And you can see that was a nice move down to a new low. Then we had a nice reversal. And this was the first real break of this trend line, so it's okay to go short again. And even though it took it a minute to work out, it worked on lower until we got caught in this little range, range right here. And you have to know to stay out of that because of the overlapping bars. 1, 2, 3 overlapping bars, then this doji right here, and then another overlapping bar, and then two more small dojis. And this would have been okay to go long right here. If you saw that, I don't recommend that trade, but as you can see, that would have caught you on the low. When you get a tiny doji right at the low of a trading range, you see there's plenty of room to scalp out before getting back up here to the highs. And you see it did stall right up here around the former highs and backed up a little bit, but you would have been long out with your scalp by then, and you would have only had a runner, and even a runner would have survived here. That's the beauty of holding runners, especially at strong support and resistance areas, because if you get lucky, and the entry would have been 97 right here on my chart, as you can see, it pulled back to 97.25, so your runners would have survived down here around 97, and you could have rode that all the way to 1309. So that's about a 12-point move that any runner would have been, and that's a freebie. And that's why I'm always saying the best place to hold your runners is at strong support or resistance when you're expecting a possible reversal. So just remember that. You don't have to even use runners, but you're going to make better money when you start to use them. There's days where I don't keep any runners at all. When it's in stuff like this all day, I generally just scalp out every trade, and I'll get my enough when I reach my point goal, I just quit for the day, and I don't worry about runners because you don't hardly catch any. But there's actually I wouldn't say a danger, but there's a downfall to that, because sometimes your best runners come out of nowhere, and so if you're keeping them all the time, you're more likely to catch some of those big runners. But what I've found is that the market is really choppy. Sure, you might catch some runners out of there most of the time, but most of the time you just waste all those trades and you could have scalped out, and the money kind of works out evenly in the long run. So the best time to hold on to your runners is at strong support and resistance areas, and that way you generally can get some more points out of them. And so holding a runner right here, if you took that trade, would have made you 10 or 12 points today, and that, just that one contract, and that's a pretty good take for the day on a single contract. And if you held on to multiple contracts, then you really made some money. So just remember that. That's generally how I manage my trades. If the market's trending, I'll hold on to runners. But if it's choppy like this, I generally will only hold a runner coming off these strong support areas, or if it was trending the other way, strong resistance areas. So just keep that in mind, and that'll help you a little bit with some of the trades. But let's go back to talking these trades. You had these two key entry points. This was a key entry point, but this is a much harder trade, a lot harder for some of the younger people to see, or newer people to see, I should say. But I talk about this is also another key entry. It's more aggressive, but once again, I believe your runners survived this trade. If you entered right here, you would have entered at 98.50. And you would have survived that, but the better entry was to wait and enter above this bar, and you would have actually entered at 99, and that would have, I believe that one would have survived too. And so either way, you still caught a good runner, 10 points or so, by taking these entries down here. And the only clue to know that this was reversing was this break. If you got this trend line right, this break right here, and then the move down to a new low. And this is really the kicker right here. This is notice how this move barely went a few ticks lower. This move just went a few ticks lower, and then this move finally could not close any lower. And this is basically a double bottom. That's starting your clue to find out there's some real strong support here, and eventually the market's going to bounce and go test these highs again. And so that's when you want to try to hold on to a runner, hoping that this thing at least go test these highs, and you exit up here with 3 or 4 points at the very least. And if you really want to hang on, you hang on and get the 10 or 12 points out of it that it actually gave us today. So just remember that. But the other key entry points are right here. There's a couple of reasons to take this trade. You had a high here, you pulled back, you moved back. So that's a two-legged pullback to the EMA, which is one of our, after a nice move up, that's one of our number one money-making entries. You got that. Then you've also got all these overlapping bars that broke lower here. So that's a failed break lower, but it's also a retest of this breakout area. Notice how it pulled back and retest this area right in here. It was kind of acting as resistance across here. And that's a retest, so that's a breakout pullback long as well. So it's a breakout pullback second entry long. And so there were multiple reasons to take that trade. And if you entered there, that was an easy scalp. They did pull back and get your runners here, and it broke higher and failed again. And then we kind of chopped around in here. But this was a tricky one right here, and I actually got an email from somebody today asking about this trade. And really, I circled this in green because it's questionable, because there's 1, 2, 3 overlapping bars, and one of them's a doji. But this was kind of a trap where prices broke lower and then turned higher. But when they didn't go any higher from here, prices really should have shot off here. When they didn't, and they turned back down, what you want to do, you either need to be using a 2-point stop, which is what I usually recommend, and you definitely should have had your stop below the former low here. And you see where this one came to. If you'd have kept your stop, actually if you'd had your stop below that, you still would have got stopped out. So it would have taken a 2-point stop. If you used your 2-point stop, you would have survived this. But one of the clues is these 3 overlapping bars, and even though this one is kind of a trap reversal bar, notice how it couldn't break higher on that bar. When this bar closed right here and didn't tick higher above this previous bar, it didn't have a lot of strength. So that gives you 3 overlapping bars and 2 of them are dojis. That's a clue to stay out. But again, that's basically all that is prices broke out of that little range. Trap people broke down and broke out the low side and trapped people again with the trend and then took off. So this was really the best place to enter. So the only real clue was the fact you had these 3 overlapping bars. In this one, even though it broke lower first, it could not break higher before it closed. And it did close on its high, so I can see how people could easily get trapped there. Even I could easily get trapped there. But if you don't use, you're either using a 2-point stop or you take your, if you're not using a 2-point stop, your exit's right here. You know, don't, if you're going to give it to right here below this low, go ahead and give it the 2 points because it's only a few ticks lower and you would have survived. So, and if you look, this is a 1 pullback 2-legged move back to the, and it did break the trend line, but we know that after this move up, we're probably going to expect another run to a high, and this was a great entry right here. And this actually was just another retest of this area, so that's a nice double bottom. And notice how it couldn't close down here as low as it did last time, and this is just a second test of this breakout area. And remember the rule, when the market tests something twice and fails, it's likely to be successful and going much further in the other direction. And that's all this was this is a double test of this breakout area right across here. When it broke out, it usually is going to test that twice. So that's another clue. What prices we're trying to do here were pull back and test this to give it a double test. And when it got that double test and it held and actually closed higher here than it did over here, prices rocketed off. So that's what prices were really doing here. They were struggling to even get back here and test this, but they were trying to come back and test this breakout area right here. And when they did a second time and it held, it was off to the races much higher. And then we just went into another little trading range at a higher level. And this is, remember what you hear me talk about, repeat patterns. And that's all this was right across here. If you draw your line, let's just do it like this. If you draw your line right across here, you can see we came up a little short, but yet this is 2 legs. Can you see that? And I bet you if you measure these, I wasn't trading by this time, so there's first leg, and look, if you measure that, there's a perfect 2-legged move. And you got to learn to be able to spot these on a little bigger. You see there's some choppy, there's actually 2 legs in that move, and then 2 legs back. You see there's 1 leg up, pull back, second leg up, and then the second leg down. And those are 2 perfect measured moves. And we held at this support area just like we did over here. And this is basically a repeat pattern, just looks a little different, but it's a repeat pattern to this. So once you see a pattern work once in the day, it'll probably do the same identical thing the next time. So, but really it was too late to be entering here. This is kind of a moot point to even be talking about this. As you see, it was almost 3 o'clock. And it's just not smart to enter that late in the day. If you still got a runner going or a trade that's open from previously, that's okay. But don't enter trades this late in the day, because if you got fooled here going long and then this sold off and you got stopped out right down here below this low, then you might have ended up with a losing day because you don't have time to make it back because nothing happened in here the rest of the day really. But if you get burned down here early in the day, you got plenty of time to try to come back and find another key entry. And if you caught this entry right here, you might have made up for a big loser over here or even a couple of small losers. So keep that in mind. And but here again, your key entry points are along these trend lines, which is what we're always looking for, are at these support and resistance areas. And always make sure that we're pulling back. I would rather miss these trades right in here because they didn't quite get back to this area. And as you see, they couldn't go much higher. There's a lot of little dojis and overlapping bars in here. So don't get antsy to enter. And this one right here could have fooled anybody. I mean, sometimes trades just fail. And normally this looks like a good setup, but they needed to come back. For some reason, prices needed to come back and test this breakout area. And they fooled everybody along right here. And that would have been easy to fool even a good trader, because you had this move lower that turned higher and it closed on its high. But the only real clue I could tell you, not to take this would be because this didn't break higher before it closed. I probably would have had an order to go long right here trading this if it broke lower first and then came up here. But when it didn't break higher before it closed, that would have been a good clue to just remove it, because then you got 3 overlapping bars and at least one of them's a doji, and actually 2 of them are doji. So that rule means it's congestion. And what happens when prices break out of congestion? They normally fail the first time, and that's what happened. They broke out of here, they failed and went lower. But then look what happened with the trend. We broke lower here out of that little congestion area again, failed and reversed and went back with a trend. And that's what you expect. That's exactly what you expect to happen. Not only that, plus this was a break of the trend line. This was also a double bottom and twice to test this area. So a lot of reasons to take that long right there. And you probably would have wanted to wait and go long above this bar, but even if you went long right here, you were still in good shape, and there was no pullback to get the runners here, so any runners would have got 4 to 5, 6 points right there. So anyway, this is Mac with PriceActionTradingSystem.com. I'm going to call it a day. Hopefully you learned something in this chart lesson. It continues to be a little bit difficult trading because we're just not getting a lot of movement, and I would expect that we may test this 1300 area several times before prices give up and go higher, and we may break through it a few more times, but it may eventually hold and take off like a rocket. But it doesn't surprise me that we're retesting this, because this is a key psychological area. 1200, 1300, 1400, those are all those century marks are key. They're psychological areas, and they're going to get retested a lot, and they're going to find support and resistance there quite often when they get on either side. So just expect that, and we'll see what happens. But I'm going to wrap it up, and we will see you next time. This is Mac with PriceActionTradingSystem.com.